Now, the first step to trading the Forex is to understand the several key chart analysis techniques. And that's basically like the foundations of building a building. You've got to put good foundations down to be able to build anything on top. And good foundations of charting is knowing your support resistance, how to find them, the correct placements for trend lines, and just basically knowing the chart and just understanding how momentum and all that sort of things work. But support and resistance is probably one of your most paramount ones, because that way you know where basically the ball's going to bounce. Well, you know where it's got the possibility of bouncing. So in this lesson, we'll learn how to identify the support and resistance. But before we do any of that, we need to start with the basics and define how to identify the high or low on a chart. So we've got a group of candles here, and what we do is we find the absolute highest part of the candle, which I've got here as the H. If we've got two candles lower to the left and two candles lower to the right, then we know that is a valid high. Exactly, and you can see here again, two lower candles to the right, two lower candles to the left. Now, the high points on the chart, you can see here, and I'll just make sure I'm not going ahead of you guys, because I've got the screen being projected on another computer. So here we are here. Here it is. Two lower candles to the left, two lower candles to the right, and here we have it again. So these are denoting good solid highs. So there can be more than three closed candles. I like to just have a minimum of two, but three to be on the safe side, especially when you're beginning and you're not very much, haven't had much time in actual trading yet. So to find the low point, it's exactly the opposite. We find the lowest part of a candle, two or three higher candles to the left, two or three higher candles to the right. The important part is just to find the extreme low. And here's the example here on the same chart. There's your lows. And of course, here are our highs that we just looked at. Now, an uptrend is the price movement of a currency pair when the overall direction is moving higher. More specifically, it's when each successive peak high and valley low is higher than the earlier trend, making higher highs and higher lows. Just simply explaining the chart, but here's your lows and here's your higher highs. So if you've got higher lows, higher highs, you know that you're easily in a trend going up. L1, L2, L3, and L4 as the lows, H3 as we go through. So if you do that, then you actually find where the trend is going, and then you start to look, when you open the charts up here, you can go, okay, well, if I get a pullback, I can expect it to probably come around this high here, which is now support. And if I start to get a bounce and a candle formation, or if your indicator says, right, it's ready to go back up, well, then you can trade safely or more safely in that direction of the trend if the trend is going to continue. Now, these higher highs and higher lows are also marking both resistance and support lines. So once you find these areas, just put a small horizontal line across them, and that will make it a lot more, stand out a lot more for you as well, once you find those two lower candles to the left and to the right.